Okay. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting for this week, 11th to 15th of April, the expected market moves and also how exactly the Forex market is going to behave during this Asian session live market analysis in the forecast webinar, which I am giving it on 11th of April between 5 and 5:30 GMT. So I'll be giving the session-wise forecast for the entire week from Monday to Friday. That is the 3 sessions of the day, that is Japanese, European, and the US sessions. And you can follow those forecasts and try to do the swing trades during that of the sessions. And that is a basic idea that this free forecast is given for the small traders. They can really make use of uh, the certainty the forecast gives, and then they can take appropriate trading decisions. Besides, to fine-tune the forecast, I also explained to you how exactly the market reading has to be done using the initial lows and the highs in the live market code page. So as far as my forecast is concerned, it is enough if you follow only the live market code page, what is being displayed here. No other technical analysis or fundamental analysis is needed, and you will be able to easily understand how the players are making the moves in the market, create the market sentiment, and act against that of the traders' pending positions, and that we should be able to read beforehand, and accordingly we can take appropriate trading decisions. Then, as long as we are human, we are bound to commit mistakes. And in the event, if the forecast goes wrong or the market has moved against the expectations of the forecast and the market reading, how exactly we have to handle the position so that we should not have any distress condition. For that, the trading strategy is also explained, and that is simply using the hedging. And once you use the hedging, then you will be in a position to limit the risk and maximize the profit. So let us look into the of the components. So all the 3 components are taken into consideration before taking trading decisions, namely the derived forecast and the market reading and the live market analysis, in order to fine-tune the forecast and the trading strategy. In the event if the market goes against, we use the risk limiting factor and also the profit enhancing factor. With the help of that, we are in a position to consistently earn from the rubber market. Now this is a forecast sheet, and this is for this week, 11th to 15th of April. And here you come across it is the second week of April. So the monthly trending move is expected to happen. Swing and rise moves are expected to happen in the case of Euro and GBP, and also in the case of the denominator currency as a contrarian move. And last week you will notice that they pushed the GBP alone down, holding Euro, and also pushed down USD yen and USD CHF, mainly to make extended downward stop and move in the case of yen crosses and CHF crosses. That way, they just made the downward move, and then later on from this week onwards, they are going to handle the majors mainly. As a result, you'll come across the crosses will have some cooling time, and the majors will have a shift in trading zone. So let us see how exactly in this week, second week, they're expected to make the moves. So the timings of the sessions are given here, and this is based on the daylight saving system time, and so you can make a note of it. It may differ from that of the conventionally how exactly the analysts use the timings, like that of the Asian session, then also the European session, London session, New York session. All those things might appear that they are sensible, but actually the players follow this particular time. So if you want to read the intentions of the players, then we need to know their language. So rather than trying to understand using our known language, so we have to go to that of the encrypted language of that of the players, and then we will be able to understand what they are trying to do it. Then our trade becomes child's play. So it is basically reading the intentions of the players. Whoever be the player, we will be in a position to read their intentions based on their moves. Because if anybody wants to earn money from the market consistently, and if he is using a large chunk of money and with which he wants to earn, he has to be only cunning. So that cunning intentions, if you read carefully, then we are through. We'll be in a position to trade along with them rather than trying to trade against them. And so they will pretend as if the market has set the trend. And immediately the traders will think the trend is our friend and commit the positions. And later on, the players reverse it and trap all the traders who have committed the position. This is a simple play. Day in and day out, they do it. And if you are wise, we should stop getting victim of such act of the players. Now, on 11th of April today, swing and rise is expected during the Japanese session, and then swing and slide during European session, and then again they are expected to make the rise during the US session. Then tomorrow they are expected to make the swing and firm up during the Japanese session and rise quickly during the European session, and then start making some profit booking slide during the US session. Then on Wednesday midweek, they are expected to make the swing and rise during the Japanese and swing and slide during European and swing and rise during the US session. So when there is a swing and slide move, you can wait for the slide to happen and then try to take a buy. Then they will make the swing and rise. You can book profit during the rise. That way you can plan your trades. Then 14th of April, Thursday, swing and slide is expected to happen during the Japanese session and then form up during European and rise big during the US session. We'll come across in this week the slow shift in upward shift in trading zone, and then we'll be able to understand that the players are here to just create uncertainty to that of the traders from time to time, and then try to accumulate the positions. One-sided, they gain the levels so that anybody who is trapped on the wrong side and continue to average it, they go in for a big loss. That's why the trading strategy becomes a big, important aspect in order to conserve the equity and also trade and earn money from the market. It will appear market is risky provided you do not understand who are playing against us. We are all small traders, and those who are playing against us are giants. So it is impossible for us to defeat the giant, but we can trade along with that of the giants, and that they cannot prevent it. Now on Friday, they are expected to make the swing and firm up during the Japanese session and then swing and slide during the European session as a small dip. And then they are expected to rise for weekend. Then third week of April, 18th to 22nd of April, they are expected to make further big gaining in the case of Euro and GBP. Now if you look into the market here, you can understand that Euro is trading around 1.1414 level, and then USD yen is showing 107.86. So here you find both are showing good USD weakening move. But in the case of GBP last week, they made that drop. By dropping USD yen and dropping GBP, they were able to really drop GBP and cross. Then similarly, they dropped CHF. So after dropping CHF along with that of GBP, then GBP CHF has also undergone such change, because when CHF denominator becomes stronger, then GBP CHF also they are able to bring it down, and then later on they are expected to make big gains now on. Then in the case of Canadian dollar, again they made the USD weakening move by making a downward move to that of 1.29 area. But in the case of Australian dollar, also they dropped it to 0.75 area. So all contrarian moves, they had done it last week in order to handle the crosses to start and accumulate the positions. So why they drop? They drop and accumulate the positions. Then later on from the next week, they start gaining the levels, and once they gain the level, then the traders going for a breakout trade, they hit their stops and then continue to gain the levels. This is this game plan. So we have to understand how exactly we can sustain our positions during such volatile moves of the market. That is using the trading strategy. Now coming to that of the levels in which the currencies are expected to swing. Now, in the case of euro, they formed the low 1.1395 and they could come down to 1.1350 during this week. And then later on, they are expected to gain the level 1.1425 as the high today so far. And in the case of GBP 1.41, last week they came down to that of 1.4007. And then that is how they just made the extended downward stop and in order to push it upward in a big way. And they'll start gaining the levels unassumingly. Last week, you would have noticed that they quickly gained the level and dropped, quickly gained the level and dropped in the case of GBP in order to give the feel to that of the traders, okay, GBP does not have the strength to go up. So next time when GBP goes up to 1.13, traders will take sell positions, but the players will gain it to 1.46 and induce them to do the short covering. This is the way they try to do it, which is already indicated that they formed the initial high 1.4137 and they just breached the high and staying above that, and which clearly indicates that they are going to do more gaining in the case of GBP when compared to that of euro in this week. So we have to read their intentions and accordingly take the positions. USD and 108 could be the strong support level. They are just trading below that and came down to 107.6Y, and then they are expected to quickly gain in thin volume condition. Later on, slowly will come across. They will continue to gain the levels, and 118.33 is the high they are set, and they are expected to go to that of 111 to 113 level in this week. And quickly and aggressively, they are expected to gain the level. And people might think that, okay, when GBP has come down, so they will look for first resistance, second resistance, and continue to sell. And you know, the yen crosses or the currencies wherein they gain about 300 to 400 pips in one go, telling some stories and excuses, and then trap vulnerably the traders who commit big without taking stop, without keeping the stop. Then in the case of USD of 95, they are expected to hold and then slowly gain the level to that of 99 area, and they formed 95.27 initially and then breached it. So you can understand how they breached the initial high in the case of GBP and also initial high in the case of CHF. So this is how they made the extended downward stop and followed by that of intentional upward move. Then in the case of CHF, 1.2975 was the initial low. They just breached it and they could come down to 29.50 and then start gaining to 1.3275 area. And the high is intact. And in the case of Australian dollar, 0.7529 is the low they are set. They could come down up to 75.25 and then start gaining to 78 area. And so already in the case of AUD also, they breached their high and formed the new high 75.77. So you can understand how they are making contrarian moves in the market and simply holding euro. So if you commit based on these reading, your positions will make good profit. Simply you think that okay, euro is a safe currency to commit, then you try to take a position, probably they will simply do the consolidation. So you have to find out where they are doing, bring in the momentum, and then identify those are all the momentum currencies for the day, and then bet on them. You will be able to really make quick money. So trade along with them basically. Then in the case of euro, they are not breached the low or the high. The range is narrow, so there is no point in committing position at the moment. Let them make a small downward stop and then the small upward stop, and then we can commit positions. In the case of GBP, low is in 1.4108, and then the high they breached it and formed the new high 1.4144, and holding above that of 1.4137 for more than 30 minutes, indicating that they wanted to slowly gain the levels in the case of GBP to start with during the day. Then in the case of yen, 107.65 is the low. They set slowly they are gaining the level, and they once they breach 108 and consolidate and accumulate all the cells, then you will find they will start making quick upward moves in order to book profit with regard to their buy positions. And in the case of CHF, 95.16 is the low and 95.37 is the high. They set 95.37. They are sorry, 95.37. They are not breached it, and they are expected to gain the levels. They are holding in the middle level. They are expected to slowly gain the level in the case of CH. Then Canadian dollar, 1.2975 is the low. They just breached the low and they are staying below that of the initial low, 1.2975. So, and they are likely to come down during the day. And in the case of Australian dollar, 0.7529 is the low and 7572 is the high. They breached the high and they are holding above that of the initial high, indicating that they want to gain. And normally during the early phase of the week, they gain more in the case of the commodity pairs. So commodity pairs lead the rally and lag behind later on. Then euro and GBP take over the rally on the upside. So this is the way they try to do the moves so that they are able to handle the crosses successfully. Now with regard to the trade plan, so I just kept a buy limit order 1.1395 near that of the low. Still it is not being filled, and 30 pips above that of the take profit order and 30 pips below the hedge order to limit the risk. Now in the event if the market comes down and hedge it, then we need to watch for 30 minutes. And during the 30 minutes of watch, if the hedging is not making profit, then we understand during that of the stop and they just filled the hedge order. So we close the hedge order with 1 or 2 pips or 5 pips loss and keep another hedge order. Then they start gaining the levels and fill our exit. And when they come closer to the exit level, what we can do is keep stop at entry in the buy position and move the exit level 20-30 pips away each time and see whether they are able to go higher. If they go higher, then trail the stop in the entry level, keeping about 10 pips away from the other market. So that if the market or 10-15 pips away from the market, if the market suddenly drops, we will be protected with a minimal profit. When they go up, we will try to raise the exit level or take profit level as they gain the level, so that we'll be able to maximize the profit without taking risk. So because when they suddenly reverse, our trailing stop will book the profit. But they always make volatile moves in the market. So you have to carefully study and manually trail the stop. In the trading platform, what happens when they quickly gain the level, the trailing stop goes up, and immediately the platform providers fill the stop. So you manually trail the stop so that you will not be in a position to get hurt, or you will not be limited with a minimal profit. You will be able to really maximize the profit. So this is a simple trading strategy. You can do it in the event if the market has hedged you and the hedging is making profit for more than 30 minutes, then immediately you close your the buy position with about 20-25 pips loss, but the hedging will be making about 5-10 pips profit. Once it comes to 25-30 pips profit in the hedge side, and when they make a downward move, you are at break even without praying to the God that the market has to go up. So in that process, what happens, when the market comes down little more, you make net profit. You might have lost about 20-25 pips in the buy side, but in the sell side, you would have earned about 40-45 pips or 50 pips, so that you will have a net profit of 20-25 pips. So use the trading strategy. There are other various trading strategies also, and those things I explained it during the Tracking the Forex Market Together webinar, what I had given it, and those recorded webinars are available in FX Street under my profile, Dr. S. Sivaraman. You can just go through those things and understand how exactly you can focus on the trading strategy. Thereby, you will be able to really consistently make money from the other market, because that is our basic objective. Then these are all the session timings, and so you can follow those timings. And the Japanese session gets over by 7 GMT. Then 7:30 to 13 GMT is the European session. 13:30 to 20:30 GMT is the US session. In between, you come across the gap time. Follow the market only using the GMT time frame, not your local time. Because once you use the GMT time, you will be able to track the market 24 hours. And then you will be able to really understand how they are making the swing and slide, swing and rise, all those things. Early and the late sessions, they handle the majors, and mid sessions, they handle the crosses. You'll be able to visibly see how they are suddenly changing their act from time to time. Exactly by close of the early session, they will start handling the crosses. Then exactly by start of the late session, they will stop handling the crosses and handle the majors. We'll be able to really understand how they systematically follow the timings. And only we use different timings to read their language, but we fail to understand what they are trying to do it. And we think that, okay, the fundamental is driving the market, but they have a very systematic plan of manipulating the market. And every time you come across a fundamental data is released, then immediately people expect the market to behave in line with the expectations based on the fundamentals, but they pretend and reverse the market. So ultimately, they continue to gain the levels irrespective of the non-farm payroll or whatever it is. So you have to understand they are all nothing but the euphoria they try to create, and the traders wait for such things to happen. And later on, you find that the players make their own moves. And then we need to understand what is going to be their own moves, irrespective of the data. And in line with that, that is going to be the real trend in the market. In line with that, we have to trade. Simply correlating the market with regard to the fundamentals, or correlating the different currencies, or correlating the forex market with it of the stock market or commodity markets, etc. They might appear correlated because the chart patterns might look similar, but ultimately what the players do is important in each and every market, depending upon the volume, depending upon the traders' spending positions. So keep that in mind and understand the players are here to track the traders and earn their money for their big billion-dollar investments. So they do not want to lose even 1 cent. So if they want to earn like that without taking risk, then they have to forcibly manipulate the market. So let me answer the questions which are asked here. Okay, what are the big what are the maximum pips movement for Euro and GBP on a day? I explained it earlier in my webinar, My Trading System. If you follow, you'll be able to really understand that 150 pips they can make net change in the case of Euro and 250 pips in the case of GBP. They are the maximum permitted levels. Have you derived those session timings? These session timings based on their moves consistently for several years. And there are other inside informations which I collected. That is God's grace. I think more than that, with which I was in a position to give exactly what they are trying to do in the market. Any other question, please? Okay, thank you. How about Euro GBP cross? Is coming down from now? No, Euro GBP, see, last week they gained good Euro, and dropped GBP. So they could go up to the Dow 0.81 or 0.8150 as an intraday extended stop, and or if needed they may go up to the Dow 0.82 and then start making a drop to the Dow 0.7576 area. So any quick move, try to take the counter trade. Okay, can you display the slide again? The forecast slide. Okay, thanks for your understanding. Okay, so this is the slide giving the forecast, and these things, I mean, the webinars are all recorded and displayed under my profile. And you know, FX Street has got now the beta version also. So both in the regular FX Street website as well as the beta FX Street website, they are displayed. So you can just go through that. In the event, if you are not able to locate them, you can come to my website, iknowindices.com, and then in the blog, the link for the recording of the webinar is given, and there you can click the link and listen to the webinar if you've got any uncertainty or the doubt with regard to the forecast. And in the event, if you want to really get some serious informations, you can always contact me through my email ID, dr@iknowindices.com, or you can contact me through Skype, iknowindices@hotmail.com, and my website URL is i-knowindices.com. So I'll come back on Friday, 18th of April, and try to give the forecast for next week. So wish you all happy trading, and I also take this opportunity to thank FX Street for the facilities provided to present the webinar, and always keep in mind that the players are here to make extended moves, so they don't simply do range bound moves all the time. So suddenly when they make a downward extended stop, and that means they want to make a big rise in the market later on. So that we need to understand and read their intentions carefully, so that we'll be able to avoid getting trapped in the market. Thank you one and all. Wish you all happy trading. See you on 18th.